Hi, I'm Donna Barwick, and when I'm not helping small business owners with their tax preparation and accounting needs, I'm listening to the P.O.W.E.R podcast by EVB.
Being a woman in business can be demanding and draining, but that has never deterred a determined woman to go after her dreams. That's why you're in the right place. This is the P.O.W.E.R podcast, brought to you by EVB, where we believe in the power of you. At EVB, we're proud to be the first community bank in Virginia to reach out to women in business with a customized program designed to meet your unique needs. In each episode, expect to hear engaging interviews filled with advice, insights, and recommendations to charge you up and build your business. Now, for your host, Mary Foley.
Welcome back to the EVB P.O.W.E.R podcast. I'm your host, Mary Foley, and this is episode 12. And in fact, this is the final episode for season 1. And the good news is that you don't have to wait several months for season 2 to start. We are not skipping a beat. However, this does mean that if you haven't binge listened to season 1, now is the perfect time. And here's how to make it easy. Subscribe to the P.O.W.E.R podcast on iTunes or Stitcher, where every episode is listed all in one place. You just go to evbpower.com. You click on the icons to download either the iTunes app if you have an iPhone or the Stitcher app if you have an Android phone. And then you click on the app, create a free account if you don't have one already, and then let the binge listening begin. Now, this episode is being released towards the end of February, which means that many of you are getting together your documentation and your information to file your upcoming taxes. That's why today I'm talking with Donna Barwick, President and CEO of Barwick Associates, a certified public accounting firm located in Colonial Heights, Virginia, and serving clients in the greater Richmond, Virginia area, across the U.S., and even abroad. Barwick Associates offers a wide range of services to individuals and businesses in a whole bunch of different industries. And I mean wide. Their professional services include tax management services, estate trust planning and tax preparation, QuickBooks accounting help, entity selection and restructuring, computer consulting, cash flow and budget analysis, audit reviews and compilation, IRS representation, payroll services, debt and financing, advising, and more. That they're really good. That's just some of the things that they do. But with the upcoming tax filing, we're going to focus mainly on picking Donna's brain about that topic. So Donna, welcome to the EVB P.O.W.E.R podcast.
Thank you.
I'm going to start with a basic question, like a little bit more that has kind of backup that has to do with the kind of business I start, because I know that some women listening are thinking about starting a business. So if I am dreaming of starting a business this year, or if I'm already in the early stages, what type of businesses should I consider, and what are the major differences among them? Because I know they have some different tax advantages and disadvantages.
Yes, they do. Mary, I do have some small businesses that opted to be C corporations. Usually that would be the right choice if they possibly are concerned about employee benefits, or if they need to have a chunk of working capital or investment capital in their business. But C Corps also have that dreaded double taxation issue. So most of my small businesses choose to be LLCs or S corporations. I have heard from numerous lawyers that LLCs offer better protection for the members' personal assets, but the good news is that an LLC can elect to be an S corporation for tax purposes. That way you get the best of both worlds. That is my preference for most of my clients. The S corporation status allows the LLC members to pass through a portion of their income that's not going to be subject to self-employment tax, which is a huge savings. I don't really touch that much on partnerships because the situations there can be a good choice, but usually people end up doing the LLC route, which is what becomes a partnership for tax purposes. But obviously, it all depends on the business's specific circumstances or their needs.
Okay, that's good. That's good to know. So, because I know a lot of people start out with an LLC, which is far better than a sole proprietorship too, because it sounds like that wasn't one of the ones you picked or even said as an entity. It's almost like a default. If I start a business and I don't create an entity, I'm a sole proprietor, right?
That is correct. That is correct. And then you have the issues of the self-employment tax, which you have with an LLC potentially too. But If you take that LLC and then make that S election inside it, then you get rid of that self-employment tax issue.
Well, we're in the middle of tax season and getting all of our information together to send to the IRS. What are some deductions that most small business owners overlook or often misunderstand?
I think the number one thing that we should keep at the forefront of the whole process before we even start talking about specific deductions is that you need to have organization. Organization's really going to be the key. That should be kind of a year-round process so that you're not scrambling at the end of the year to find your missing receipts and your documentation, because what is going to happen is that you're going to miss those deductions. So that being said, I would say that my clients, I try to tell them to think about things that used to be personal deductions that could possibly be legitimate business expenses now. Things like cell phone or internet, a computer purchase, and the expenses related to your home, like your mortgage interest, your real estate taxes, your homeowner's insurance. You may be getting your interest and taxes now on your tax return as an itemized deduction, but that business deduction is going to be a better tax deduction for you.
Homeowner's insurance. I never would have thought of that for your home office. So how do you take a percentage of that? Because I know I pay one lump sum. Well, actually, I don't pay one lump sum. I pay it as part of my mortgage every year, but it's one amount for my whole home. Right. How do I figure out what portion I can deduct legally?
I got you. I think the first thing that you need to remember is that home office needs to be exclusively used as a home office. It can't be used as a spare bedroom. It can't be like a corner of your family room. It needs to be a room that you use for your home office. And then they have two different methods that you can use. You can take your actual expenses, like I said, your mortgage interest, your real estate taxes, your homeowner's insurance, your repairs, your utilities. You take all of those and then you prorate them based on the square footage of the office versus the square footage of your house. And that's how you make that determination. Or if you want to take the easier route, instead of tracking all those actual expenses, a couple of years ago, Congress actually passed a safe harbor rule, and you can take $5 per square foot for that home office up to a maximum of 300 square feet. I do tell people that you should actually track your actual expenses for one full year. That way you can kind of see which one is going to give you the biggest bang for your buck.
Got it. Okay. Yeah, that was what I was wondering about. Based on your experience with clients, does the safe harbor rule most of the time come out to be the easiest thing to do, or actually doing the square footage and calculation? But it sounds like it might just depend.
It does depend, and I would say most of the time that doing the actual expenses, you get a little better deduction for it. And these days, it's so easy to pull all of your information. You're going to get a lot of the information straight from your mortgage company, and then your utilities, you can pull off your annual bill right off of the internet. So they've made it really simple for you to be able to actually do your actual expenses. So I think it's worth it most of the time.
Yeah, it kind of goes back to that organization piece that you were saying, too.
That's right.
Yeah.
That's right. It all starts right there. Yeah, absolutely.
Organization pays. That's one of the bumper stickers, I can tell. Well, what about mileage for our cars? And when we meet clients for lunch or coffee, how do I account for those expenses in the eyes of the IRS?
You document. I tell my clients it's important. You document for both of these areas. Because if the business is going to be audited, those two areas are going to be prime target areas because there's so much abuse in those two areas. So as far as the mileage, the IRS doesn't really have set rules on how to document. So I tell everybody what's going to be easiest for you. What's going to be the most efficient, most effective for you. It can be a notebook in your car. It can be a calendar with appointments with mileage jotted on it. It can be printouts for the internet that document your miles to a location. It can be an app on your telephone. It's not really how you document, but just the fact that you do document it. You can also use the actual expenses, but then you have to keep track of all of your receipts, your gas, your repairs, all of that stuff. So most of the time, the mileage method for a small business is the best way to go in the long run.
Mm-hmm. I find it over time the easiest too. And the IRS is pretty generous. It's usually, well, right, I know it changes every year, but it's about 50 cents, 53 cents per mile. That's a lot, adds up quick. You go 20.
It really does.
Yeah.
Yeah.
Yeah. And
Yeah.
so it's that's kind of like the better, to me, it sounds like when we were talking before about the square footage of if you have a home office and what deductions to take, it sounds like it's better if you're able to actually track all the specifics for that versus the safe harbor rule. But with mileage, for car mileage, it's like, man, take the per mileage deduction, and that's generally ahead, right? Now,
Absolutely.
when it comes to, let's say I have lunch or coffee, and let's say I'm buying for that person, how can I take that entire meal as an expense or only a portion?
You only get to deduct 50% of it. So you report the entire 100%, and then the actual tax deduction becomes 50% of that.
Okay.
It's very important, and it's very important that you keep all of that documentation as well. You keep your receipts, and you need to be able to tell the IRS, who you took to dinner or to lunch, and why you think it was a legitimate business meal. If you're old school like me, you take that receipt and you flip it over on the back and you write all that information. If you do the electronic receipts, then you go back later on your app or your computer, wherever you're storing that, and you put some type of documentation down, because they really want to know that it truly was something that was related to your business. So I tell everybody with both of these things, you just continue to document all of this, because if the IRS comes knocking, you're going to be glad that you've got that documentation.
Oh yeah, because heck, I can't remember that memory. I actually had to create the habit of capturing it like right after, or there was always a time every month as I went through all of my expenses where I wrote down, oh yeah, I met with Donna, we talked about this. Because my brain is getting full. I don't know about yours, but I'm trying to find crevices to put stuff in, and the last thing I want to do is remember, that I spent $3.20 over at Panera Bread, talking with somebody. I gotta write that down when I get it. Okay, great. Man, Donna, this is all so practical. I'm already getting some ideas about what I'm going to have to do differently for tax prep this year. Listen, we need to take a quick break, and when we come back, I want to find out your advice on keeping track of all these deductions. In addition to what you've just said, I have a very specific question. So hold on. We'll be right back.
Hi, this is Julie Hill, the Director of P.O.W.E.R at EVB. Every day I sit down and talk with Virginia women in business. I feel their passion, I see their commitment, and I hear their challenges. Sometimes that includes finding a banking partner who will truly listen and help them grow. That's what our P.O.W.E.R program is all about. To find out more, go to evbpower.com or reach out to me at julie.hill@bankevb.com, and let's sit down and talk about your business. At EVB, we truly believe in the power of you, because when women in business succeed, we all do.
Welcome back. This is Mary Foley, and today I'm talking with Donna Barwick, President and CEO of Barwick Associates, a certified public accounting firm located in Colonial Heights, Virginia, and serving the greater Richmond, Virginia area, all over the U.S. and even abroad. Now, Donna, we've talked about some of the tax deductions I can take as a business owner, and also we've talked some about keeping track of those deductions. But as you and your team work with clients, what real difference does it make if I have all of my business and personal transactions in the same bank accounts? How big a problem is that?
Oh, my.
2 words, she said it all, people.
It is so important to keep your personal expenses and your business expenses separate. Mixing the two of them is a nightmare at tax time, and it's costlier. It is such a nightmare to try to separate. Is this for her business use, or is this for her personal use? Is this for business? And you're taking the receipts, and it's back and forth and back and forth. It just gets to be crazy. But I think just as important as that is that it's impossible for you to be able to tell throughout the year how profitable your business is when you're mixing those expenses. There's no way for you to track what's business and what's personal. And, banks these days just make it so easy and so affordable for you to have your own business bank account and your own business credit card. So it just makes no sense to intermingle all of these things.
Mm-hmm. Yeah.
Plus, you want the IRS to see that your business is a business. It's completely separate from you. You just don't want that overlap there.
Yeah. Even if, it sounds like it's a rookie mistake, so to speak, a startup mistake. But from your experience, all these years working with clients, I mean, even as businesses have grown, have you found that even if they started with kind of commingled accounts, that they still didn't separate?
I have clients that I've probably been working with for 20 to 30 years, and there is still some mingling of the business and the personal. Sometimes it just never goes away. And it could be just that they got their own business account and they've decided that that's their personal checking account. And you're going, no, this belongs to the business. So it's an ongoing process trying to train these people.
Yeah, right. Well, I mean, I'm just going to say one thing I really appreciate about EVB and the Power program is that you immediately get a checking account, you immediately get a credit card. I mean, and right there, boom, you've got two tools ready to go. So, I mean, I had to fill out some paperwork and stuff and had to do that for myself, but this is not necessarily difficult. It's just making the deliberate choice to do it. That sounds like,
absolutely.
Sounds like it'd make my accountant happy too. Okay. Well,
very, 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 very happy.
Very happy. Yeah. Okay. Well, all right. So it also sounds like good accounting isn't just about business documentation and tracking, but it's also about accounting for a business mindset. Is that right?
Oh, absolutely. I just feel like that is so important. You almost have to legitimize your business in your own mind. That's where it all kind of begins.
Yeah, absolutely. So just that step of, all right, I've got separate bank accounts, I've got a separate credit card, I've got a separate system, separate space, right? It's all a mindset, if nothing else, but it's not just if nothing else. It really does affect how you think about your business. Like this is, like you said, legit. So it's not just about keeping track of things, it's about how you think about your business.
That's right. That's right.
Okay. So let's say I've got my documentation organized, I've got my accounts separate, and I have a business mindset. How can an accountant help me grow or run my business better? Because I'll be honest, first thing I think of when accounting, I think of stuff from the past that I just have to, quote, account for, documentation and tracking, which is obviously a part. We've talked about that. But is there more than an accountant can do?
I think having a CPA available throughout the year is so important for tax planning. I tell my clients to call me before they do something rather than for me to try to figure out how to fix it all after they've done it, try to back up and regroup. It's just crazy to try to do something like that,
Mm-hmm.
So we try to help them make the right business choices at the right time for tax purposes. It's just easier if they pick up the phone, email me. It's just so easy to contact me, and I can tell you what to do right then instead of fixing it later.
Now, let me ask you something about that, because like equipment, let's say I need a new computer or I need a new printer, or I need to buy something like that. And I need it, well, sometimes you just need it immediately now because it's broken, right? Or it's gone bad.
Right.
Sometimes you're like, I'm going to have to replace this at some point this year or, in several months. Should I call you even then when I know I've got to buy it, but is there an advantage talking or emailing, my accountant to say, hey, is there a better time than another? Is that the kind of advice like you're talking about that might impact my taxes?
Yes, please call your CPA, your accountant at that time. Because what happens is, particularly at the end of the year, now, like you said, if something's broken and you have to fix it right then, that's different. You have to buy it, you have to move on. But if it's something that can be happening in December versus January, that's when it's really essential that you talk to your tax planning advisor so that you can say, do I buy it now or do I buy it next month? Because depending on when you might need that particular write-off is where you're going to put it.
Mm-hmm.
And you also have to make the choice of whether you really need this. Is it a want item or a need item? Because I am forever trying to teach people that you don't spend $1 to save 20 cents. You don't go out and buy something that's, if you can buy it for $1,000, but you really like the bells and whistles on the $1,500, it's like, you're not going to save enough in taxes to warrant that extra $500,
Yeah, exactly. Which might be why you don't always get the questions beforehand and ask to fix it later. Like, well, I really wanted to get it with all the bells and whistles, but it almost sounds like checking in with your accountant. It's also,
I never thought of that.
Yeah, I mean, like, okay.
Mm-hmm.
However, what I'm also hearing is that you can be a sounding board and double check, particularly when you're making a large an expenditure.
That's right. Absolutely.
Okay.
Yeah.
Wow. Okay. All right. So, is there something else that an accountant can do to help me grow or run my business better?
Yeah, I think that one of the things that I like to concentrate on is being able to help people kind of unpack their financial statements. Kind of explain what the numbers really mean. Where you're headed, what's working, what areas of concern there are. And to me, there's such a wealth of information in people's businesses, the business's financial statements, and they're often ignored. And I think that's for a couple of reasons. I think one is because they seem so complex and nobody has been willing to take the time to explain it to the business owner. And I think just like you touched on earlier, it's because that information is historical information. And, we're so forward thinking anymore that we feel like that we always have to look forward. But I think sometimes we forget that all of that history that's behind us can teach us so much. And, I think we kind of ignore all of that because we're just kind of moving forward, fast forward these days.
Yeah. So like your P&L, your profit and loss statement, you could say, hey, let's go through this line by line so you understand what these numbers mean. And maybe behind these numbers, there's some questions that might pull out, I don't know, just some improvements or some tweaks about not just expenditures, but perhaps some decisions that you make on profitability.
Right. And, and your P&L is the thing that people tend to look at first when they're trying to understand all of that stuff. But your real history is in your balance sheet because your balance sheet goes on. That's a cumulative thing that rolls on from the beginning of time of your business. So when you're looking at that balance sheet, it tells you everything. It tells you, you can pull out ratios out of that. You can find out about, how much cash flow you've got. There's so many things that are on that balance sheet that give you so much more information than just looking at that P&L. And, but the P&L is where people look at because they're looking at that bottom line for that year to see, what their profitability is. So.
Well, so the P&L plus the balance sheet sound like two big ones to really understand what's behind the numbers. What these numbers really mean, just kind of at one level, but then what they really mean at a second level.
That's right.
Love that. If I have an established relationship with someone like yourself, it's just my gut says that seems smarter.
Absolutely. Yeah. I tell people it's so important to make a connection with a CPA. You want to have a long-term relationship established, with a professional so that they can help you make financial adjustments as life happens. That's what I like so much about my career is that, we're not just number crunching. We're getting to know everything about your business, everything about you, everything about your family. It's all about being we call it caring professional advisors, which is what we say our CPA designation means. It's really getting to learn how to be somebody's long-term advisor and building that relationship.
There's just got to be things that even unexpected happen. Somebody gets sick,
Absolutely.
Right? And then can't produce like they used to in the business. And
if you have trusted that person, for 20 or 25 years or whatever the case may be, at that point when there's something that you really need to talk to them about that you might not feel comfortable about talking to someone that you just throw your tax stuff at, once a year, then that's where that long-term relationship is really going to be invaluable.
Well, let's say someone wants to get in touch with you, Donna, and talk about their situation and maybe figure out if you might be a fit for their needs. What's the best way for someone to contact you?
Our website is www.barwickcpas.com, or they can call me, 804-729-0030. or they can even email me, which the email is on the website, but it's Donna@BarwickCPAs.com.
Okay, that sounds simple enough. Donna@BarwickCPAs.com. I love that. And make sure that CPA stands for Caring Professional Advisors.
Professional Advisor.
I love that. That is great. Well, we talked about a lot of different things today, Donna. What's the one piece of advice that you'd like to leave with everyone today?
I would say if you started or are starting your dream business, bring alongside you all the trusted advisors that you're going to need to make that dream the biggest reality it can be, and to dream big. We've all been there, done that. Dream big.
Yeah. Hey, why not? If you're going to dream, just dream big. That's what Donna says. All right.
Yeah.
That sounds great. Hey, Donna, thank you again for your time today. It was really fun talking to you. Loved your time, your advice, and for helping us to be more accountable.
Sometimes good, sometimes not. But yeah.
Always good. Thanks again.
Thank you.
All of us have powerful women in our lives, just like the one on today's podcast. At EVB, we're bringing these amazing women together to be a part of something special. Our P.O.W.E.R program is unlike any other. We not only have banking and financial options, we also provide opportunities for you to promote your business and to make valuable connections. To find out more, please contact me, Julie Hill, the Director of P.O.W.E.R, at julie.hill@bankevb.com. I look forward to it.
Wow, that was fast. But we hope that you're feeling recharged and re-energized to continue to power up your business and go after your dreams. Love this Power Plug episode? Let us know. Leave a comment on Facebook or visit us at evbpower.com, where you can hear more episodes just like this one to keep believing in the power of you, just like we do.